This video is for entertaining purposes and not an investment advice. Seek professional opinion from licensed consultants and do your own research. Intercontinental Exchange Incorporated, ticker symbol ICE, was founded in 2000 and is headquartered in Atlanta, Georgia. It is one of the leading global operators of financial exchanges. It operates regulated exchanges including New York Stock Exchange, clearing houses, and listings venues for commodity, financial, fixed income, and equity markets in the United States, the United Kingdom, European Union, Singapore, Israel, and Canada. While company's main source of revenue has historically been trading commissions, the company has also been able to monetize the data generated by its exchanges. Now that revenue generated by data and subscription-based software accounts for a majority of the company's business. Intercontinental Exchange Incorporated operates in two segments, trading and clearing, and data and listings. The company operates marketplaces for listing, trading, and clearing an array of derivatives and securities contracts across various asset classes, like equities, ETFs, metals, bonds, currencies, digital assets, interest rates, credit derivatives, energy and agricultural commodities. It also offers mortgage and technology services as well as data services to support the trading, investment, risk management, and connectivity needs of customers across major asset classes. The company operates exchanges and marketplaces, cash equities, equity options, and bond exchanges, and over-the-counter markets for physical energy, fixed income, credit default swaps, and central counterparty clearinghouses. Most recently, Intercontinental Exchange Incorporated has started offering clearing of credit default swap index options via ICE Clear Credit with the goal to further standardize the marketplace. It is the world's first CDS clearinghouse, has rolled out clearing of CDS index options based on CDX North American investment grade and high-yield indices, with the vision to add index options based on the iTraxx Europe indices. This collection of indexes for the credit default swap market in Europe, Australia, and Asia, which allows market makers and active participants in the swaps market to take the other side of trades for a short period and provide liquidity in these markets. ICE stands out here with the versatile product offering, clear end-of-day pricing scheme and robust capital generation. In Q1 of 2020, ICE Clear Credit cleared the greatest amount of CDS instruments in any quarter, approximately $7.5 billion. This represents an increase of 45% over the next biggest quarter and brought the total cleared forecasted amount since inception to over $100 billion. CDS clearing revenues increased 14.7% from January till September of 2020, driven by record buy activities in terms of index forecasted amount cleared during the period, driven by market volatility related to pandemic. Intercontinental Exchange has also made a $11 billion acquisition of Ellie Mae. Ellie Mae is a software company in automation of the mortgage industry. The cash and shares transaction is one of the latest mega deal in the U.S. this summer. This deal reflects ICE's aim to consolidate its position in the growing digital mortgage industry. Adding Ellie Mae to its portfolio could possibly help it modernize the mortgage market by becoming the first fully automated firm servicing the entire mortgage product chain. The main goal of this acquisition could be to consolidate ICE's existing position in the fast-growing U.S. mortgage market. The mortgage business of the exchange operator has been the fastest-growing segment of ICE since May, primarily due to the growth in mortgage refinancing as interest rates plummeted to zero. Having already entered the mortgage market through acquiring electronic mortgage registrator MERS in 2018 and service management firm Simplifile in 2019, this deal is likely to grow ICE's mortgage market share and generate continuous revenues in the future. Key financial metrics of the deal are: transaction valued at an enterprise value of $11 billion, with consideration in the form of a mix of cash 84% of and newly issued shares of ICE common stock 16%. Expected ICE Mortgage Services pro forma 2020 revenues of $1.1 billion, including expected 2020 Ellie Mae revenues of $900 million. Expected ICE Mortgage Services pro forma 2020 adjusted EBITDA of $600 million, including expected 2020 Ellie Mae adjusted EBITDA of $470 million. including past acquisitions of both MERS and Simplify Land. Upon completion of the acquisition of Ellie Mae, ICE will have invested a total of roughly $11.5 billion in its strategy to automate the mortgage workflow. Expected Ellie Mae transaction IRR of 10%, ICE ROIC will remain above ICE WACC in year 1, growing thereafter. Expected to realize run rate cost synergies of $50 million to $65 million by the end of year 3. Expected that the acquisition of Ellie Mae will be accretive to adjusted EPS in the first full year of ownership. On October 29, 2020, Intercontinental Exchange have reported strong third quarter of 2020. Through the first 9 months of this unprecedented year, ICE have grown revenues and operating income by double digits and reported record earnings per share. In addition, in early September, ICE completed strategic acquisition of Ellie Mae, expanding mortgage network, while also enhancing the diversity and resilience of long-term growth profile. For the quarter ended September 30, 2020, consolidated net income was $390 million on $1.4 billion of consolidated revenues, less transaction-based expenses. Third quarter GAAP diluted earnings per share, EPS, were 71 cents. Adjusted net income was $569 million in the third quarter and adjusted diluted EPS were $1.03. Third quarter consolidated net revenues were $1.4 billion, up 6% year-over-year, including $75 million related to September 4, 2020 acquisition of Ellie Mae. Data and listings revenues in the third quarter were $700 million and trading and clearing net revenues were $711 million. Consolidated operating expenses were $784 million for the third quarter of 2020 and included $56 million of expenses related to Ellie Mae. On an adjusted basis, consolidated operating expenses were $611 million and included $29 million of expenses related to Ellie Mae. Consolidated operating income for the third quarter was $627 million and the operating margin was 44%. On an adjusted basis, consolidated operating income for the third quarter was $800 million and the adjusted operating margin was 57%. Third quarter data and listings revenues were $700 million, including data revenues of $589 million and listings revenues of $111 million. Segment revenues were up 5% with data revenues up 6% year-over-year. Data and listings operating expenses were $378 million and on an adjusted basis, were $329 million in the third quarter. Segment operating income for the third quarter was $322 million and the operating margin was 46%. On an adjusted basis, operating income was $371 million and the adjusted operating margin was 53%. Third quarter trading and clearing net revenues were $711 million, up 6% from 1 year ago and included $75 million of revenue related to Ellie Mae. Trading and clearing operating expenses were $406 million and adjusted operating expenses were $282 million in the third quarter. Segment operating income for the third quarter was $305 million and the operating margin was 43%. On an adjusted basis, operating income was $429 million and the adjusted operating margin was 61%. Energy futures and options revenue in the third quarter decreased 14% year-over-year driven by 8% decrease in average daily volume and a 6% decrease in rate per contract. Ags and metals futures and options revenue in the third quarter decreased 11% year-over-year driven by a 9% decrease in average daily volume and a 2% decrease in rate per contract. Financials futures and options revenue in the third quarter decreased 16% year-over-year reflecting a 24% decrease in average daily volume and partially offset by a 9% increase in rate per contract. U.S. cash equities and equity options revenue in the third quarter was flat year-over-year reflecting, in part, a 29% increase in cash equities average daily volume offset by a 21% decrease in rate per contract. The effective tax rate for the third quarter of 2020 was 32%. Operating cash flow through the third quarter of 2020 was $1.8 billion and free cash flow was $1.6 billion. Unrestricted cash was $610 million and outstanding debt was $17.3 billion as of September 30, 2020. Through the third quarter of 2020, ICE repurchased $1.2 billion of its common stock and paid $500 million in dividends. For 2020, data services revenues are expected to be in a range of $590 to $595 million. ICE's fourth quarter 2020 GAAP operating expenses are expected to be in a range of $855 to $865 million and adjusted operating expenses are expected to be in a range of $695 to $705 million. ICE's fourth quarter 2020 non-operating expense is expected to be in the range of $75 to $80 million. ICE's full-year 2020 capital expenditures are expected to be in a range of $410 to $420 million. ICE's diluted share count for the fourth quarter is expected to be in the range of 562 to 568 million. Weighted average shares outstanding. Analyst rates ICE stock form performed to strong buy. It comes with a price target from $101 to $126 that analysts believe is the fair value for the stock. Analyst rating consensus at the moment is strong buy, with 9 analysts rating it as buy, 2 as hold and none recommending to sell. Intercontinental Exchange Incorporated has a trailing history of about 15% annual growth last 5 years and it is expected to grow about 11% annually for at least 5 years ahead. If you have invested your money in ICE stock 5 years ago when it was trading about $51, you would double your money by now. I personally like ICE stock for the almost arrow straight up trend line for the last 8 years, giving unique opportunity to predict the future growth of the stock price. Technical analysis also signals buy to strong buy suggestions for the near 1 month period. On the negative side, there was little bumpy road for the stock price in the last 6 months. However, future prospects should outweigh some volatility swings. Despite all the macro uncertainty, it could be one of the best investments in a market with low volatility of beta 0.63, respectable 1.2% dividend yield and fairly constant ratio of around 29 at the moment is a bit higher in comparison to other securities exchanges' top stocks. In the last earnings call, ICE management gave clear guidance for the fourth quarter of 2020. It is no wonder that Cathie Woods picked this stock. At the end of September this year, ARK Investment Management LLC increased in ownership of Intercontinental Exchange and added 60,152 shares at a value of $5,510,000 to ARK Invest ETF's portfolio. We can expect ICE stock to trade sideways with uptrend trajectory, giving us some opportunities to get a discount on this full of potential stock. To my opinion, ICE is way undervalued at currently level and I expect $150 by 2021 with strong growth ahead. It might sound as very bullish outlook, but ICE should be considered to be the best exchange in the US with amazing growth and strong balance sheet. Intercontinental Exchange. The Intercontinental Exchange logo and other Intercontinental Exchange marks are trademarks of Intercontinental Exchange or its subsidiaries. Other names and brands may be claimed as the property of others.